All right, let's talk about equities. Let's see what the markets are doing. For whatever reason, you need to know what the S&P and the Nasdaq are doing. This is the SPX, this is the S&P 500. So, if this is going up, then most likely most of your stocks are going up. If this is going up, then also most likely your Bitcoin's going up, your crypto's going up. This is a good indicator of the overall direction of the markets. It's also a good, helpful indicator on which direction crypto is going, where Bitcoin is going, and just the overall market structure. So, coming into Friday of last week, we were down here in this range, and I told people I thought that this was a good buying opportunity, even if not for long term, for a short term swing trade, and that you could probably make your profits into next week if you just wanted to do a short turnaround trade. So, anyone that bought in this area and was also prepared if we drop down a little bit further to buy here, once again, you didn't have to be buying the S&P 500. You didn't have to be buying the SPY ETF. That's not what this play was specifically. This was to show you that when this goes down, most likely your stock is going down. If you were trading something that was outside of this basket and didn't seem to be affected, feel free to let me know in the comments and we can talk about that. I can make you a video or we can talk about whatever specific stock that you were trying to trade that maybe I didn't give you any good information on. But for the most part, this right here should give you direction on just about the majority of most stocks you're playing, especially if you're trading stocks, equities, or cryptos. That's basically what this channel is about. I'm not focusing a lot on just every single stock in the market. This is based around growth stocks, tech stocks, metaverse plays, things that have to do with Web3, and companies that are invested in crypto or at least move like crypto, risk on assets, things of that nature. Tesla, MicroStrategy, you name it. They're the risk on tech plays. That's what we're focusing on here. Things that are going to move like crypto moves, and stocks that people might say are controlling the direction of crypto and Web3. So that's what we're paying attention to here. Going back to last week, in the Friday, this is the range that we are in. I told you if you wanted to be buying and loading up on whatever stock it was that was moving in, accordance with the S&P, to be buying your stock when you see that the ETF, the SPY or the S&P 500, the SPX was down on this line. That's when you wanted to buy your stock. If you were to drop below this line, I wanted you to not react too fast. Wait and see if you're gonna, be able to bounce back up. If not, and it was gonna start printing candles underneath this line and turn what was support into resistance, to wait until you drop down to the next level and to purchase your stocks there. Coming into the next week, Monday, we shot up through here so fast. Even on a low time frame, there's no candles. Even on a 5 minute, 1 minute, no candles, unless you're trading on seconds and looking at second candles. You didn't see anything in this range. It went up here with force and it went up here fast. I told everybody that this green line, when you're below it, you could not just worry about it as being resistance, but it could be a take profit zone, which was a continuation, if you were following me further back the weeks prior, of the same setup that I had given you in here. And then you blasted up into these zones and you should have been taking profits. As you see, right when we started putting wicks, and this is on low time frame, this is a 15-minute candle. So this isn't like over the course of an hour or two, it battled up and down and then it lost. This is a 15-minute candle. So it closed the body way below it. So you'd be looking at this just being a few moments that you were in this zone. And if you had been following what I was telling you and paying attention to as your stock was rising, and you're wondering how much more money can you get out of it, if you jumped over and looked at the SPY ETF or the SPX and you saw that you were in the 3,700 zone and remembered what I was telling you, or if it's a SPY ETF, you're in the $370 range, then what you would have realized is as your stock was peaking right there, that would have been a good time to sell it, secure your profits, and wait to load back up. That's what I was trying to show you guys, is how to, make these trades to where you can make, money several times a week, if not, several times a month minimum, at least once or twice a month. But when it's moving like this with volatility, usually you can get a trade or two every week or so, or every week or two. So, even if you're getting 1 to 3 trades a month, that's pretty good. It can be a extra helpful portion of your income, a little extra something to fall back on. Okay, so when you came up into this zone and hopefully sold, then it turned around and sold off. Just like I said, the bears stepped back in, ran it all the way back down. You could have started slowly buying right here on this first trend line if you, believed on this bounce. But if you just waited a moment and seen if you were going to really print candles on it, as I've been telling you guys, and turn it into support, you would have got that reaction. These weren't quite on it. This was still floating around. When you came down to print candles on it, if you see, the very first candle was wicking through that zone. That wasn't good. So the next one printed below it. That gave you some idea of where this was going. Then even though you're wicking back up above it, the candle bodies were closing below it. So as I've been trying to teach you, you're immediately turning support now into resistance. When you're on top of it and bouncing, you got support. When you end up underneath that, it's not, oh, this is coming right back up to support. You have to worry that that's now been turned into resistance and you're stuck underwater, and it will hold you underneath that zone. So this would have been, a good range to pay attention to, that you were, still printing candles not above it, but below it or in the midst of it. As I tell you, then look for the next line down to grab support. As it came down to this line, you could have already been loading back up. This is literally within 48 to 72 hours, and mainly which is just because there was a weekend involved. If you remove the weekend, this was a back-to-back trade over 3 days, and you bought down here. Well, if you go back, you even have the first one I showed you. So you come in on Tuesday, October 11th, and you make these buys. You can even go back here and talk about this. On the 10th, I told you to start watching these lines. And then when you got above them, same thing. I'm just repeating myself. So, when you bought here, you could have been selling here. So this was, a trade on Monday. Then you came right back down to these lines where I told you to load back up. And then boom, Tuesday, you're making money again. You made money Monday and Tuesday, both days, making money. Then you came back down here. You can call this a short play to make a little profit on Wednesday. But if you held it and kept waiting for, loading back up below lines, when you dropped and blasted straight through both supports and came down here, remember, buy the fear. You know what I'm saying? Look for the levels it might start holding, but buy the fear. Anybody who, was confident enough to step in here and buy this fear, then turned around and made some real money right here. Now you're into Thursday. You've literally had 3 positive trades in 1 week that made you money each time off just paying attention to these simple outlines I'm trying to show you. You don't have to have charts. You don't have to be charting. You don't have to be good at any of this. You literally just had to jump over and look at the SPY ETF if you don't have the SPX, or for whatever reason it's too complicated to look at it or whatever. But any one of those two things, just jump over and look at the SPX, or jump over and look at the SPY ETF and get a basic number and correlate it to this right here. If you're looking at the SPY, then just remove decimal, move it over, and you've got $360.70. That's where you're at. So right here, you now had 3 positive trades. Then coming into this week, I'm talking about that week prior, coming into the end of the week, then all of a sudden it goes all the way up into Friday and continues paying you. And if you paid attention to the lines and what I was trying to teach you, you sold right here in this zone perfectly, so high into the peak, and then ran it all the way back down to rinse and repeat on that same day. You sold on Friday and you repurchased on Friday. You've now made money 4 times in 1 week. Now, if you held this position, or you reloaded up on this position, and you come back into Monday, you did it all over again. Look at this. You bounced up, you came up to the line. As long as you didn't get greedy and you paid attention to the fact that you're not even wicking into this, so you're holding right below that line that I tell you, that's the profit zone. Anywhere up in here, that's the profit zone. Then you could have sold again. Or if you just started building a position and holding this, that's fine. You held all the way into Monday, and then boom, Tuesday, making money again, right up into the next resistance zone, where I not only gave you a resistance line, but I gave you a big fat hammer. I mean, this could literally be, you know, watched with no verbiage. You could just turn the sound off and mute me and watch this and just look at the pictures, and it's super simple. It's like a connect the dots. You realize you're buying in here, you're making your money selling at the green. If you get back up into these zones, be prepared to sell off. So if you're still holding, you take your profits again. When you come back down to a line and hold, you purchase again, or you wait till the next level down. So right here, you've had clean setup, super easy to understand. And if it's not, and that's just me thinking that, it's that easy, and really people aren't understanding it, tell me what you're not understanding. Tell me it in the comments, or DM me if you feel like, oh, I don't want to say something stupid in the comments, people are going to rip me up. But just DM me, or leave a message in the comments, whatever you need to do, and we can figure this out. I can help explain it until you can understand it, try to make some money. So now you talk about coming into this week, and you're hopefully taking your profits because this was a super strong move. And also, no candles in here. It's a void. It needs to be filled. Typically, you come back and you fill them, which is exactly what happened afterwards. So if you once again took your profits on Tuesday immediately like you're supposed to, and not get greedy and think you're going to the next level just because it's early, Tuesday turned around and sold it right back off for you, filled these gaps, and gave you a re-entry to load back up. Now within a 14-day period, you're on like positive trade setup number 5 in 14 days, made money 5 times. This is, paying you more than your job you're at if you're just paying attention. So immediately you load up, and then you get paid again on Tuesday if you have a trading account and you can trade in, trade out. If you chose to just trade it anyways, then maybe you took a hit for a day trade. But hey, if you got that money and you made it, then hey, you're still in the positive. It's another day where you got paid to trade. It doesn't hurt you. Maybe your eyes, it wears out. Maybe gives you a little carpal tunnel in here sometimes. Might give you a headache, but it's not breaking your back. It's not, killing you in so many other ways that your job is that you're miserable at, as most people say they are. And if you love your job, then all the more fun. You made some extra money while loving your job. That's what you really want to hear. You want people loving their jobs and loving making money. So you've now had this whole other trade again set up, and you're also printing and showing you're holding support here. So then Tuesday, you could have rebought, could have resold, and then rebuy again on Tuesday. This is literally, multiple trades in the day. And you might say, oh, well, that's not moving. That's only, going from 370 to 320. Well, if you're, someone who money, a little bit helps you, then that extra $20 could have been helpful. Could have bought you you know, not that it gets most people a tank of gas anymore, but could have bought you a fifth of a tank of gas, or it might have bought you some lunch. Every little bit helps. Excuse me. Every little bit helps. But more than that, what you need to realize is that the other stocks, they move in greater momentum compared to this. If you were using this and you compared to what Bitcoin did in the day, Bitcoin moved a lot from this bottom to this top. And if you're comparing, other high growth stocks, they might have, say if this is a 3 to 5% move in any given day, say it goes 3% up, or say it goes 2.5% up, your stock that you're trading that's a higher risk, high growth stock, tech stock, something like that, or something related to crypto, something Web3, those things move so much more in a volatile condition that if this moved 2.5% super strong really quick, you might get 8 to 12 or 15 to 20 plus percent in that stock you're trading. And then immediately it sells off the majority of that too, and it comes back down. So this rinse and repeat is making you far more gains than you realize. I mean, if you're getting, 3 to 5% per move on this thing, and your stock is actually getting, 10 to 15% or 8 to 12% each way, and you've now traded this, 3 to 5 times over 2 weeks, and you got 8 to 12% each time, add that up and tell me where you're at. Even if you didn't get it very well and you just get portions of it, you're like, oh, I didn't really get the bottom and I didn't really perfectly sell at the top, then you still should have got about, say 4 to 6% minimum. Let's just say a 5% average on each proper trade. And that's without shorting it. If you understand shorting it, then when you go up to the top and sell to make your money, you flip your position and then sell it back down. And that doubles the amount of trades you've made. You've now actually made, instead of saying is it 3 to 5, it's 6 to 10 trades in 2 weeks. And the week's not even, second week isn't even over yet. So looking at it from that point of view, even if you made a minimum of 5% or 3% each trade, do the math on it. 3 times 5 is 15. Or, did you make 5 trades and you got 5% on each one? That's 25% gains on your money. If your overall net worth is only, you're like, man, I'm so broke, I'm so poor, I barely have $1,000 to my name. Well, you just turned it into $1,250. So now you have an extra $250. And if 1,000 is that big of a deal to you, tell me that 250 didn't just help you. And same thing if you're like, I could barely get my hands on $100. Well, tell me where you're at now. You just turned it to 125. That 125, that extra 25 didn't help you. And for people trying to trade some real money, if this was a $100,000 account, or say it's a $50,000 account, but you're using, even on Robinhood, you're using this basic margin, then your 50K is actually 100K in stocks. So at 100K, you just made 125. And since you're using margin, your $50,000 in margin that lets you trade 100K in stocks, and you just made 25% on that 100K, you've now made $25,000 on your 50,000. That's, tell me that's not helpful to you. I'm trying to help people here. So going forward, you come into Tuesday, you sell off. If you loaded back up, then coming into Wednesday morning, pre-market kind of time, you've got a bounce all the way back up here. Could have sold and then got a sell-off. Or if you're just continuing to, accept this range and buy in, waiting to see if we go higher, you've got that idea too. In the bigger picture of what we were talking about was the general idea when we closed out yesterday, and also what we were talking about Monday, is watch for if we can start printing candles up in this range and holding it as support, to use this as more momentum to go higher and really start looking at this other zone that I've got you guys that technically could get crazy all the way up to 42. But I'm not going to tell any of my people to hold that long unless things change as they go. And then maybe I'll make videos telling you, hey, it's looking safer. Here's a pullback I expect. Let's load back up. Then, hey, but for the most part, I'm still telling you guys, watch this upper channel, but it is setting up to push again. And whatever stocks you have that you're buying and loading up right now, when this makes just this 50-point move, your stock will make a much greater move. And if we can bust up into here and start printing on top of this, we have a really good shot at a run towards these crazy numbers that people are saying, where we need to go back. And I do agree there's some gaps that need to be filled up around the 3,900 to 4,000 range. And this could definitely go push up there real quick and then peak back down. But those moves will most likely happen so fast without a real change in narrative. And like the war gets better, or inflation's going to start coming down permanently, the Fed's done pushing, the recession is over, the economy is bottomed, and everything's up from here. Without a whole narrative like that, what you need to be looking for is those pushes up into that zone are just for the bears to get more momentum from the top in a better position, and then they're just going to nuke it down so fast that you'll come right down through those levels so quick, you won't have a chance to even think. It'll make your head spin. You'll start feeling sick in your stomach. And you go, oh man, I went too far. And then I started loading up on these short pullbacks, and this guy didn't tell me it was safe yet. So, don't do that. Take the easy, safe money. If you're buying right now, again, on this load up, do so with the understanding that if we get a little bit of bad news, one little thing comes out in the middle of the day, this will drop. And then don't look to just, grab immediately when it's below it. Wait and see what's going to happen. Are we going to come back up and hold it as support? Are we going to come down here and touch, and this is a real load up zone again to see what happens? Or have we already, hit the top of that channel and we're done, and now we're coming down and we have much, much lower numbers to go? We need to come down and prove if this is actually some sort of sustainable bottom, and we can, double check it, come down and hit a double bottom and then rally back from there. Or when we come down, are we going to blast through it and start going into those lower levels that I'm telling you guys to watch out for as we get later into this year, and that I expect to see somewhere between right after Thanksgiving and Q1 of like probably the ending of Q1 of 2023 as we start